Hey everybody, welcome back to the show. Today I'm here with my buddy, Edwin Kelly from Specialized Trust Company. We've been friends for a long time. In fact, I use his trust company for all my retirement investing, and they work with a lot of real estate investors and folks that are interested in that. And we're going to talk about kind of what's going on with all these COVID changes, what's changing with retirement accounts, and based on where the market is, like what you should be doing differently right now to plant the seeds for your retirement. Professional real estate investors know that it's not really about the real estate. In fact, real estate is just a vehicle to freedom. A group of over 100 of the nation's leading real estate investors from across the country meet several times a year at the Investor Fuel Real Estate Mastermind to share ideas on how to strengthen each other's businesses, but also to come together as friends and build more fulfilling lives for all of those around us. On today's show, we're going to continue our conversation of fueling our businesses and fueling our lives. I'm glad you're here. Hey, Edwin, welcome to the show.
Mike, it's great to be back, man, as always.
Yeah. You're, you know, what's funny? This is like totally out of left field or right field or somewhere. I saw this, have you ever seen this thing? It's like, oh my God, I'm going to screw this up. Anyway, the actors, there's a couple of actors that are like vying for who's been on Saturday Night Live the most.
Okay. I haven't seen that.
People that have been on like 20 times, or I don't even watch Saturday Night Live anymore. But anyway, you've been on our shows probably 3 or 4 different times over the years. So always good to see you. Of course, always good to see you outside of shows too. So weird time, right?
Yeah. It is something else. You know? I'll say that, I like I said, I kind of, I came to the conclusion the second Saturday in February that this was going to hit the U.S. And so we went into massive action and started changing a lot of things. So by the time the quarantine was announced and people realized we had a problem here in the U.S., we were already ahead of this. I mean, as ahead of this as something like this that you can be, right? You can never really be ahead of something like this.
Right.
Who knows what that's going to look like. But yeah, I mean, it's been a really interesting time. And in fact, when that was all, when we were getting prepped for that in March and we were doing a lot of work, it seemed like it was changing by the hour.
Yeah.
Now things seem to be changing by the week. So that's a good news, right? I mean,
Yeah, I think, there's going to be, who knows what this thing's going to look like on the back end, but I think a couple of things. One, for real estate investors, it's going to be a good thing. Every kind of recessionary period or down market is good for investors. And I say investors that are prepared, right? Because the bigger things are the competition that doesn't really know what they're doing goes away. That's one of the bigger things. Yeah. And the more professional investor tends to have put some effort into having other sources to raise money from other than national hard money lenders that are also on the sidelines as of the time we're recording this, for sure, right? And so having access to capital and having access to more deal flow because some of the competition has gone away. And I know that's one of the things that we're going to talk about today is obviously using self-directed IRAs, not just like people's individual IRAs to invest. It's, obviously helping people transfer money into self-directed IRAs so they could become lenders effectively, right?
Yeah.
100%. Yeah. Awesome. Well, so before we kind of jump into what's going on, some of the changes, some of the regulations, like some of the regulations that nobody knows what it means yet. There's all kinds of stuff that's a moving target here right now. Why don't you tell us your background a little bit and kind of how you got to where you are?
Yeah. As you said, right, my name is Edwin Kelly. I'm CEO and co-founder of Specialized Trust Company. We are a self-directed retirement account custodian. So we allow clients to open up self-directed IRAs, Roths and traditionals, health savings accounts, solo 401ks, right? It runs the gamut. And we allow clients to take those accounts and take their retirement account money and invest in all kinds of things like real estate, right? And notes and all these things that is part of this community.
Yep.
So that's what we've been doing. I've been doing it for over 23 plus years. I say 23 plus because what I realized is that every year I update that number. I just age myself. So it's 23 plus. I'll be 90 years old and I will have 23 plus years experience in this business. And so I've been doing this for a long time. I think one of the things that I'll say that has been an arrow in our quiver, so to speak, is the fact that a long time ago when I got started in this industry, I started working with folks on a one-on-one basis to figure out what their challenges were, self-directing. And as a result of that, was able to work through a lot of different challenges, issues, and struggles that people have to actually create plans so they can actually use these tools and resources. And so that's an area of expertise that we've developed over a long period of time.
Yep.
And then that's really woven into everything that we do with Specialized for our clients.
That's I'll be honest. I mean, you and I have been friends for a long time, but that's why we work with you guys. You obviously have competitors out there, but you guys take time to answer questions and hold people's hands, because some of the stuff is a little complicated. I mean, it can get complicated, right? And I tend to overcomplicate things. So it's nice to have somebody to talk to. In fact, just a little bit of a shameless plug here for you guys that are listening. I want you to stay to the end. I don't ever plug stuff like this, but Edwin has a class that he's offering. If you're not a client, they sell it for like $600. You guys are going to get it for free. We're going to actually give you an email address to email somebody on his team directly. So make sure you stay till the end, because we'll mention that. So this stuff can get a little complicated. It's not that it's complicated. It's that our lives are complicated, and we try to apply our lives into it and say, well, I have, here's my age and I've got these many kids, and it gets a little complicated sometimes.
Yeah.
So yeah, cool. And Edwin, one thing I want to say too is, and everybody that's listening right now, look, if you haven't taken advantage of this time that we've been in our caves or whatever, to try to figure out how to make your life better in a lot of ways, right? Like health-wise and business-wise and all those things, then you're probably missing out. I'm sure most people that are listening to this have actually done that. One of the things that I think what we're going to talk about here today can help you with is cementing your retirement, right? And cementing kind of long-term wealth stuff. It's not so much about today money. I mean, some of it can be, but it's about really taking the time. We all work so hard as real estate investors. And I kind of use this phrase, like, you should be spending a lot of time, or at least some time, probably more time than you're spending now, on figuring out how to keep more of what you make, because it's real easy to get taxed out of wealth if you're not careful in this business. We're always so busy moving on to the next deal and trying to ring the register without a whole lot of attention to how do I keep more of what I make. And I think that's a really important part of this business. So I'm sure you'd agree with that, Edwin, right?
Yeah, well, and people think about retirement accounts, and I'm coming up with a new name for them.
Because it's not just retirement accounts, health savings accounts. There's all sorts of stuff that you could benefit from today. Yeah.
Well, and the thing is that here's the reality of it. When most people hear the word retirement, they think, okay, I'm going to have a gold watch on my wrist. I'm going to sit on the couch. I'm going to watch TV and I'm going to feed the ducks, right? I mean, that's what people contemplate when they think about retirement. The reality,
but yeah, you're right.
Well, not guys like you and I, because we actually understand how these accounts work and what we can accomplish. Right. But when most people hear retirement account, they think, this is kind of boring stuff. I don't know that I want to quote retire. No. So the reality is what self-directed retirement accounts allow us to do is actually build wealth exponentially faster and easier than without them.
Right.
That's really what it's about. And so at any age, at any stage of life, it becomes something to incorporate into what you're doing. It's not the only thing you're going to do. You're still going to have a business. You're still going to do things outside, right? I own businesses and I do investing outside my retirement account because I have a need for current income. Right. But I also know what my tax bill looks like for last year. And I paid a lot of taxes last year, and I just found out, right, because we're getting our K1s, I just found out, wow, do I owe a lot more money? It's like, where did this come from? And there is a way out of that trap. But it takes some time and planning and some strategies, and these accounts, that's why I use them, actually helps you do that.
Yep. Awesome. So let's maybe talk about, because I think a lot of folks that are watching this probably have seen, are familiar with self-directed accounts. Let's kind of make that assumption that they kind of understand them, whether they have them yet or not. I mean, when you're kind of around our audience, like Investor Fuel members or coaching students or whatever, it's pretty common that everybody raises their hand and says, yes, I'm familiar with what that is. How many of you actually have them? And it's a lower number, right? There's people that just haven't jumped in yet. And I was in that game for a long time. I kind of knew that I needed to be, but just was so busy with everything else. So let's kind of assume everybody kind of knows what that is. But let's talk about maybe some of the changes that have happened with COVID. And there's probably some things that have changed, but people aren't real clear what they even mean yet. But what are some of the bigger things that have been kind of impacted by all this stimulus and the CARE Act and COVID and all that stuff?
Yeah, so there's three things that the stimulus plan that they wrote and approved did as it impacts retirement accounts. Okay, so there's three things. There's two things that I like and one thing that I don't really like. All right. So what's the first thing that they did? The first thing they did was they said for the year 2020, and by the way, this is all for the year 2020, right? So they could extend some of these things, but right now this is just for 2020. So when I share this stuff, understand you have a limited window of time that the government has given you to do some of the things that I'm sharing with you.
All right.
So the first thing is that they waived all RMDs on retirement accounts this year. So our RMD, if you don't know what that is a required minimum distribution. So for folks who are at an age or in a situation where they have to take a distribution, whether they want to or not, right? Government says you're required to do that. This year, those have been suspended. So that's good news for folks who don't want to take them. Now, here's the flip side of that coin though, Mike. This is what I tell people. Why did the government do that? Because they inherently know that there's a problem with the financial markets. Okay, the way that most people invest their retirement account is in like mutual funds and stocks, things side of the market, right? We all know that.
Yeah.
Most people do it. Because the market is so volatile, because it's gone all over the place, the problem is that if you're forced to start to take money out,
has a negative impact, yeah.
Down, right? It compounds negatively against you.
Right.
But here's the point. Don't miss the point. The reason why I share that, because I'm sure most people listening right now or watching are not in an RMD situation. But what that should say to you is that if you've got all your money in the market, understand the government's acknowledging there's an inherent problem with how that works. Therefore, they don't want to compound the problem, so they're not going to require people to take money out. So that should be just a flag to be aware of, right?
Yep.
So that's one of the changes they made. Second change that they made, and they fall into two categories. One is on IRAs and one's on 401ks. So if I start with the IRAs, so what they did was they said, okay, if you have a COVID-related issue, so, and by the way, you self-certify that you have a COVID-related issue.
Yeah.
Meaning you either got the virus.
The government's been doing that for people anyway, so.
So
we won't make this political, but yeah.
Or you were impacted financially somehow, some way, which I don't know who has not been impacted financially.
Yeah, especially if you're a business owner.
Right. Yeah, exactly. So the reality is that you self-certify that when you do these things that I'm about to share with you, it's a self-certification. You're saying, I'm doing this because of COVID, therefore I'm allowed to do this, right? So that's how this process works. So the first thing that they did, now this is the thing that I don't like. So this goes into the category of things I don't like. But what they did was they did a few things. They said you're allowed to take a distribution up to $100,000, okay, and they will waive the 10% penalty. So you can take a distribution up to 100K. They'll waive the 10% penalty if you're under 59.5. So that was the first change they made with regards to IRA distributions. Second change they made was they said, we'll allow you to spread that tax liability over 3 years. So you can spread out the taxes, okay? The third thing that they said is that we'll also give you 3 years to put the money back in to the account. So normally, if you took money out of an IRA, you have 60 days to put it back in. If it doesn't go in 60 days, it's a distribution and it never goes back in.
Right.
So why do I not like that? The reason why I don't like that is, and keep in mind, we look at these things that oftentimes the government does, and we want to believe that they're doing things for our benefit, right? Now, let's just assume that's was part of the motivation. I'm going to give them that. But who does this help for sure if you do that? One party that definitely wins in this scenario is the government, because they just passed this whole stimulus plan that they're spending trillions of dollars on. We don't even know how much yet, right? Because they keep asking for more money. And now they've got to come up with a way to pay for it. So now all of a sudden you say, hey, we'll waive the 10% penalty, go ahead and take money out of your IRA. They just created a whole new revenue stream that they did not anticipate in any of their models prior to this. So understand there is an inherent benefit for the government if you take a distribution.
Yep.
So, but here's why I don't like it. The reason why I don't like it is because the last thing you want to do is create a long-term problem by trying to solve a short-term problem. So that the reality is,
the government is very good at doing, by the way, kind of robbing from the future for today, right? So,
I mean, that's exactly what they do, right?
Yep.
They kick the can down the road. The problem is you and I can't kick our lives down the road, right? We actually have to deal with reality. So here's what happens. You take somebody who's in their 50s, and let's be honest, probably most people who would do this or have the money accumulated, they're going to be in their 40s or 50s at this stage of the game. If they take a distribution because out of a financial necessity, chances are, even though you're probably telling yourself in your mind, well, I have 3 years to put the money back in. I can tell you from doing this my whole life, people don't put the money back in.
you find some way to blow it, yeah.
Because if you're taking it out for a financial hardship, think about it. How are you going to generate an additional $100K to put it back into the account? Right? In the next 3 years. So I'm not saying it wouldn't happen. I'm saying 99% of the time, it never happens. Okay.
Yeah.
That's the reality of it.
Life gets in the way.
Yeah, life gets in the way. Like there's always things that we can spend money on. I mean, that's just how it is. So the problem is that instead of depleting your nest egg, I'll say there's 3 things you need to do in a market like this. The first thing you need to do is preserve your nest egg. Okay. Because the reality is most people are not correctly set up to step out of a W-2 job, or if they're actively involved in a business, like you and I were just talking about. Like I'm actively involved in my business, you're actively involved in your business, but we want to kind of get out of that. So we've got to have either businesses that are passive in nature, which that's a trick, or you know what I'm talking about, or we have to have investments that provide an income that is passive in nature. And that, right, is what is going to allow us to step out of those situations. So the reality is the way you get there is to preserve first your nest egg and to grow it. You can't grow it if you're not preserving it.
Yeah.
So job number 1 is to preserve your nest egg. A distribution does not help you preserve your nest egg.
That's right.
That's why I don't like the distribution. Now, here's what I will say. If you're one of those people where you just have no alternative, like, you know, life is really going to go off the rails unless you take money out of that retirement account, is this helpful to you? It's absolutely helpful to you. No argument about it. Okay. But what I'm saying is that I would view that as an absolute last resort. I wouldn't do it. Now, they did something, Mike, which directly works for your audience in most cases that I do like. So let's talk about the third thing they did, the third and final thing that they did with this bill. The third thing they did that I really like is that they changed the provisions for 401k loans. Now that I do like. So what did they do with 401k loans? So if you have a solo 401k or even a 401k at work, if you got a W-2, right, this applies to all 401k plans. But what I'm thinking about is in terms of if you're in the real estate investment business, then and you have money in an IRA or a retirement account someplace else, you could set up a solo 401k for your business, right? And you can move money. You got to qualify. There's some qualifications, but we're gonna go with the assumption that you qualify right now. You can move money into that account. So how did 401k loans typically work? Because they've always been around. The way it typically worked is that you could borrow up to $50,000 or 50% of your account value, whichever is less. So in other words, if you have 100,000 in your 401k account, you could borrow 50,000.
Yep.
Fully amortized loan over 5 years. The payment starts the month after you take the loan, right? If you don't make the loan payments, you default on the loan. It becomes a deemed distribution. You don't want to do that. All right. So what was the change now that they made through the CARE Act? So here's what they changed. They said the first thing is we're going to waive the 50% rule. So there's no 50% rule in place. The second thing is they'll allow you to borrow up to $100,000. And the third thing is that they will allow you to defer payment until next year. So that's a way better solution, because when I'm working with clients right now in this market and they're saying, hey, I want to access money, and believe it or not, guess what they're accessing the money for? It's not to pay living expenses in many cases. It's like, hey, look, I found this deal and I need cash.
Right.
Transaction in my business. Like I want this one in my business to generate some cash, but I need money because the hard money just dried up, right? Yeah. So I need some more funding because all of a sudden my lending sources, they just went away. So they're able now to borrow 100,000. So and let me give you an actual case. I had a client that we just did this with. I have a client who is in North Carolina. He had a transaction that he wanted to do. So literally, he set up a solo 401k. It was him and his wife because they're partners in the business together. And what they did was they each were able to take $100,000 loan, right? Because they had $100,000 in their account, so they could each take $100,000 loan, go do
Oh,
the
that's per, yeah. Yeah. Okay.
yeah,
Per person.
right?
Yeah.
So being married, so it's $200,000
Right.
that they just accessed. $200,000 that they just accessed to go do the transaction. And what they're finding is, at least in their market, right, retail is not having a problem. They're selling retail and getting. In fact, when they put the last property they did on the market, they had 5 showings within 24 hours of putting that thing on the market, right? So I mean, their market's working for retail, and those people can get financed, right?
Yep.
So that's working right now. But they needed to get the cash because they couldn't do the deal. They already had it under contract in their business, right? But then the lender falls out.
Yeah. You typically can't do your own deal. You can't fund your own deal with your retirement account. And I mean, you can if the proceeds all go back into your account, right? But in this instance, you can take the money out and personally invest in the deal, make money on it, and put the money back, right? So do you have to pay yourself? Remind me, is there a minimum interest rate you have to pay your account back, or does that change?
Yeah. So the rate it's set by the administrator. So this is how the rules work. The government says the rate has to be set by the administrator, and it has to be a market rate of interest. So the way we define it, it's prime plus 2. So whatever the prime rate is, which by the way is real low, that's your interest rate. But just as a side note to that, keep in mind it's always your money. So you're not paying me the interest rate. You're paying yourself the interest rate because you borrowed it from your own account. And so that's a key thing to keep in mind. Your actual cost of capital is 0 on a transaction like that. So transaction, they set up the loan, they took out the 200,000, they're doing the transaction. They expect to be in and out of that within 90 days. And so they could they're just going to defer the payments out, right? Now the loan will accrue interest, but again, they're paying themselves the interest, and it'll accrue interest, but they're not making any payments. They're going to go do the transaction, sell the property, take all the cash, and drop it right back in.
Yeah. I think and the difference we're talking about here, for those of you that are listening, are making business decisions to grow your wealth. Some of it's going to be inside of your account. Some of it, there might be some short-term opportunity to do it outside of your account, kind of quasi in and out. You're borrowing from your own retirement, but if you can, you don't want to dip into your retirement or your long-term wealth money to pay for your living expenses, because you probably aren't going to be able to pay that back. I mean, if you can't afford day-to-day expenses, and like Edwin said, hey, you got to do what you got to do to survive. Like, obviously, depending on your situation is kind of where you're sitting on Maslow's hierarchy of needs, right? If you're in survival mode, like, it is what it is, right? But if you're above that, like, don't rob from your future to do these things. But there's some interesting opportunities to build wealth and make some money just based on some changes in regulations.
Oh yeah, absolutely.
Yeah.
So we're, and that's one of the things that we do, at least when I'm working with my clients. One of the things that we do is we go over the payments and say, does this payment fit your budget? Because the last thing you want to do is structure a loan if you can't make the payment, right?
Right.
You're borrowing your own money. You need to treat it like it's any other loan. Like, you need to be, because truthfully, I tell you, if you're going to take a loan and you're not going to pay it back, you're better, and it's your own 401k account, meaning for your business, you're better off taking a distribution than doing a loan and not paying it back.
Sure. Yeah.
So, but I'm just going to assume, for sake of today's conversation, everybody's doing that.
Yeah.
Right?
Yeah.
And you don't want to draw it down. The key, I'll say there's 3 things that I'm seeing that people need to do in a market like this right now. Number 1 is what I said. You got to preserve your nest egg, which is what you said, right? We don't want to rob our future. So you got to preserve your nest egg. Second thing is generate additional income.
You got to keep that money busy. Yeah.
We've got people who have bought. So we have had clients who moved it. So what is working in a market like this? I'll say there's a couple of things that I've seen clients move into, and what they're able to do is they take their nest egg, so to speak. You buy into a certain asset that generates the income. You can turn the income on for distributions to get by right now, which is a great solution because you're preserving your nest egg. You're not paying a 10% penalty on those distributions, and you can spread the taxes over 3 years. And then if you want to pay the income back, you can always do that, right?
Yeah.
But I've literally seen, and I can give you 2 specific examples where clients have purchased Section 8 properties because there's no concern about the tenants paying those checks, right? Because the government's right now. The other one was a medical commercial property where obviously people are still going to the doctor and they are still paying rent and they have the ability to pay rent. So they're cash flowing that type of property. So the point though is the takeaway is that you want to preserve your nest egg. You can generate additional cash flow, and then you can spend the cash flow, but don't draw down on your nest egg. And to basically do those two things, what you've got to do is gain access to your retirement money and get control over it to be able to invest in those kinds of things.
Yeah, that's awesome. That's awesome. And what we'll do is, if you're watching this on Flipner or on investorfuel.com, you'll also be able to access it on flipner.com. But if you're accessing it on the site, we'll have some links for you guys. I want to make sure you check out some of our previous shows where we've talked in the past about basically building yourself a private bank. And what that means is finding people that don't understand what self-directed accounts are. And I think, Edwin and I talked about this ahead of the show today. I mean, I think one of the things that happens in a down market like this, or especially with so much government intervention, is people just feel like they're losing control and they want to grab control more. They're like, I need to be in control of my destiny, right? Or my future, my financial future. And people are going to want to have more control over their investments because, some people lost 30% plus of their long-term investments here in this last kind of market downturn for sure. And it's come back, right? But some people sold at the bottom because they were afraid it would go lower. I mean, there's always every scenario you can imagine has happened in there. So if you can basically teach people how to, move your retirement, move your IRA or your 401k into a self-directed account, and then you could become a lender. And by the way, guess who wants to borrow from you? I do. You can put your money in here and I do deals. And when I do deals, you win too, right? And so check out some of those past shows because we're not going to have time to talk about it today, but just conceptually. And here's the truth. We're having the time I'm recording this, we're about to have our Investor Fuel meeting with a lot of the top real estate investors in the country. And we're talking about three main subjects. And one of them is raising money, right? Because this is what happens in a market downturn. One of the first things that happens is the lending dries up. And it's because it's institutional, but people that have relationships with private lenders, we hear it all the time now from folks. They're like, well, I have private lenders and, I got a call the other day and they're like, hey man, the market tanked. I'm so glad my money's with you, right? Because they didn't tank for them. So I think there's a lot of opportunity out there. So did I miss anything, Edwin?
No. Right now is the biggest opportunity in private IRA money I've ever seen, like you said. And so just know that, there with all the layoffs, that unlocked a lot of retirement accounts. And so there's been over $450 billion unlocked in the last 30 days. So if you're looking for private money, it really is a perfect storm because the market's volatile and people have access to the money right now like never before.
Yeah. And I think a desire to do something different, to just feel something that feels safer and investing in a real asset. I think, I've talked about this for years. My wife used to be an investment banker on Wall Street and I used to be in investments as well. Like it just feels like the whole thing's engineered. Like you don't really, there used to be this time where it's like, well, buy companies you believe in, like Nike or Starbucks. And it's like, they're all just gaming the system now. Like, how can we squeeze a couple pennies out of this to look good this quarter? Yeah. Yeah. So it's scary, but awesome. So we talked about this, guys, you really should be educating yourself right now and figuring out like how to use these tools. And I'm guilty of it too. Edwin and I have been friends for a long time. We talked for years before I started to move money into self-directed accounts and finally kind of cracked the code. And it was just because these guys had answered so many questions for me and made me feel comfortable. So Edwin, tell us how folks can find out about, I know you didn't have this on a website. They're going to have to email, I think you said Danielle directly. So tell us about what the class is and how people can join for free, like how they'll get to it.
Yeah. So what is the class? So the class is the Accelerated Wealth Building Quick Start Program. So that's a mouthful. I know you said it's a mouthful.
Yeah, you need an acronym for that one.
It's the best descriptor.
AWBQSP. Yeah.
That's actually what we call it in-house, right? We call it AWB Quick Start. So what is that? It is 4 modules throughout the month that I teach live. So it's always live because it's very interactive. And the reason why I always do it live is because things are always evolving and changing, particularly in times like these. So that's why I teach it live. The purpose of the class and one of the outcomes is that people can get set up with their self-directed account, create a plan, know how to execute that plan and get going to self-directing that account and making their very first investment and within 30 to 60 days.
Okay.
So there's a clear outcome to the class. Now, normally you have to be a client to take it, and normally it's $597. But what I decided to do, because Mike, like you said, we've been working together for a long time, and we're part of the Investor Fuel community, and we're so happy to be part of it. I thought, you know what, I just decided to do this on a whim.
Yeah, awesome.
But I thought, you know what, whether you're a client or not, the information is great because it might help you decide if you want to self-direct your account.
Sure.
So it's $597, and you have to be a client. I'm going to waive both of those things. So you don't have to be a client. You do have to be a member of Investor Fuel, though. This is not, I want to make it very clear, this is not available to the general public. I am not waiving the fee.
This is for Investor Fuel members. Okay.
Investor Fuel members only. If you're not an investor, a part of this community, then it ain't free. So say that.
But it's still a great value if folks want to learn. So maybe you could give us, so I'll tell people internally how to get a hold of Danielle. They already know Danielle. Yeah. And then for folks that are on the outside that want access to this class, do you have the link available? Is it?
Yeah. So what you would do is I would send everybody to Danielle if they're interested. What I will say is if you have an account, if you open up an account or your client, you can attend the class for free. So you can have it for free. I am waiving the fee for clients for the class right now in this environment. And so, every month I start a brand new class. We start with the first module and go through module 4. And so if you are a client or you open an account, you'll get it for free. If you are a member of Investor Fuel and you don't have an account yet, you can still gain access to that class and not pay the $597.
Okay. So who do I send non-Investor Fuel people to learn more, Edwin?
I would send, just make it easy. Send them all to Danielle.
Okay.
Danielle. Well, I don't.
Just for folks, we'll add a link down below. But for folks that are driving down the highway right now or wherever they're at, and they're listening, can you just read off? Do you know Danielle's email address off the top of your head? Or?
Yeah, it's D as in Danielle Gerbick, GERBICK at IRASTC.com. The other thing you can do is you can just make it real easy and go to specializedtrustcompany.com. The 800 numbers on the website, you can just call the office and ask for. Either way, but any of those ways work. Yeah, the reason why and this is why literally I'm saying go talk to Danielle, because I told Danielle right before we jumped on here, I said, you know what, I'm thinking about doing this. I'll talk to Mike about it.
Yeah.
So everything is set up to where if you come into the class in any way, shape, or form, you're going to pay for it. So the only way to bypass the system is just to talk to her directly and tell her you're a member of Investor Fuel and you heard this offer.
Yeah, and if you're not, then just tell her you're not, and she can give you your options there. So yeah. Awesome. Good. Cool. Well, Edwin, thanks for spending some time with us today.
Yeah, man. I appreciate you as always, Mike. And I'm looking forward to the day, hopefully very soon, where we can actually get together in the same room again.
I know. It's crazy. It's like I miss people. I miss margaritas. Like I miss stuff. Like we all miss stuff.
I didn't thought I'd say this. I miss airplanes.
Well, here's the thing. The next time you go on one, you're probably going to have your own row. So, get ready. Yeah, cool. Well, Edwin, hey, thanks so much for spending time with us today. I appreciate you, my friend.
All right, man. Great seeing you guys.
And everybody, hey, thanks for joining us today. Hope you got some good value here. Make sure you check out the links we're going to add down below at investorfuel.com. If you haven't already subscribed to the Investor Fuel podcast, I'd love it if you do. Wherever you're watching or listening now, you can subscribe there. Of course, you can get access to all of our shows at investorfuel.com. So appreciate you guys a bunch. See you on the next show. Are you an active real estate investor? If so, and you want to latch on to the power of surrounding yourself with over 100 of the nation's leading real estate investors, all committed to building stronger businesses and living richer, fuller lives, you should jump on a call with us to learn more about Investor Fuel. Simply visit investorfuel.com to get started.